Good morning. Welcome to IA Global Asset Management's quarterly podcast, where our portfolio managers and asset class experts discuss current market events, trends, portfolio allocation, and outlook. I'm Rose Marcello. I'm a client portfolio manager at IGAM, and my guest today is Marc Gagnon, portfolio manager, North American Equities. Marc is an award winning portfolio manager with a long track record in Canadian equity, real estate income, and small cap strategies. Good morning, Marc.
It arose.
Mark, first, I'd say throughout the summer and even early weeks of fall, financial markets experience increased volatility. And what was influencing that, if we may say, was global economic uncertainty, geopolitical tensions, concerns over labor markets, and even the pace of interest rate cuts. Today, what I'd like to discuss with you is the impact these elements have had on your performance within the Canadian equity mandate, but also your outlook for the rest of the year.
Well, that's yeah, you're right. That's these days there's a lot of interesting things
Mhm.
happening. I would say that for the third quarter, the for my flagship fund, the Canadian Equity Growth, the performance was in line with my peers, which is okay, but there's nothing incredible there. But I guess that's what's interesting. It's we're still beginning of second quartile and of first quartile year to date. So I had the opportunity to build a cushion in the first 6 months of the year. And why the third quarter wasn't that extraordinary? It's probably due to what you just said. A lot happened. So in terms of sector allocation, I didn't take too much risk. I was prudent on that front, and I kind of let stock selection do the most of the heavy lifting in terms of trying to add value. Stock selection was okay, maybe not good enough to really stand out in terms of performance, but certainly not bad also to create a problem. So far so good. We hope that we're gonna be able, especially on the stock selection, to stand out a little more in Q4 of this year.
Good. And I have to add for the ones listening to us that the performance so far this year is actually quite good. Maybe
And
one
yeah,
more.
yeah, that gave me the opportunity, or I will take it, to add that I was, thinking at least, and I was vocal. And if you listen to the latest podcast that we did together 3 months ago, that I thought that the Canadian market would perform fairly well by the end of the year. And so far, Q3 is on my side with the TSX index being up 10.5% and the S&P 4.5. So I even said I think we're going to outperform the U.S. market, which is you must admit quite a bold
Exactly.
announcement these days. But the year is not done. The second part of the year is not behind us. So we'll see for the fourth quarter. But I think we should be at least equal for the first quarter. We'll see.
And I'm gonna start taking like more precise notes of your predictions.
Yeah, of course, of course.
So, given the current market environment, where do you see the most potential to find value in Canada, and how do you identify those opportunities?
Well, at this point, we start with a very classical economic analysis where, we're at the point of the cycle that I would call kind of a transition where the economy is probably at the end of the slowdown, maybe entering in a small recession, depending where we're talking on a worldwide basis. But with inflation fight being mostly behind us, and we can probably say mostly one, which is quite an achievement by central banks. It was not easy, but it's been mostly done now. We can envision rate cuts in most, of the regions in the world and a lot of countries. So that's usually a very good thing for the stock market, whatever which one we're talking about. It's really the fuel of markets when rates are being cut by central banks. So that kind of setup allowed us to be positive right now. That's really the strongest current that we see. But also we still see a couple of things that are undecided at this point. There's some geopolitical risk that you've mentioned earlier about what's going on the for the oil market, and that would be negative by inflation if we really have a flare up of the situation in the Middle East. Yeah, it's this situation that is there's a lot of tension between Iran and Israel and all the Iran proxy, the Houthis, the Hamas and Hezbollah and so on. So this situation has to be contained, and that's something we are following very closely because while we're recording this podcast, we know that Israel is about to retaliate somehow. So that's going to be very important to know if things can be, kept under control. The other thing that I'm really looking forward to see what's going to happen is if Trump's going to be elected or it's going to be Kamala Harris. And of course, there's not only the presidency, but all the Congress will shape out. But I think that Trump at first will be good for the stock market. We see a lot of survey that in the state people think that it's going to be even better than a Democrat winner. But I think that with what is the economic program put forward by Trump, uh, we can have a kind of a boomerang effect with some of his policies. I'm thinking about the tariffs. I'm thinking about closing immigration. There's a lot of them, and also increasing or maintaining tax cut that will be difficult for the deficit. So all those measures they were working pretty well in 2016, but now the situation is not where it was back then, more like it was back then, and I think it's not going to be that positive for the economy over the medium term. Maybe not immediately, but it will take some time. But that's what we will need to follow. Maybe it's a bit too much ahead, but still it's a preoccupation.
Perfectly understandable. Well, given those headwinds slash challenges, are there specific industries or sectors that you believe offer an attractive investment opportunity right now in Canada? Why? And are you positioned within your portfolio to take advantage of them?
Yeah, I think that at this stage of the cycle, usually you look at cyclicals. That's the companies that are the most interesting. So you have industrial products, for example, that have a lot of cyclical names, and we're certainly looking at those names. And there's also a big bunch of them in commodities. Of course, commodities will do well if we have, this kind of worldwide recovery. And on that front, the only missing piece that we have clues that's going to happen, but we're not 100% sure at this point is will China will stabilize their housing market, and it's starting to be very important because the housing market is at this point so weak. The prices are coming down so materially that a lot of Chinese people have their saving in the housing market, and they feel less and less, wealthy by each passing day. So how they react to that, they're not consuming that much. So China is now a major player in the worldwide economy. We need to see their economy working to make sure that we have all the cylinders of the worldwide economy working in sync. And if we get there, that's going to be pretty good for Canada because all the commodities, oil, metals, and so on, and ag commodities will work very well. And we are so well exposed to those kind of companies that produce those commodities. So all in all, that's the kind of company we're looking for. I would add also maybe a brief word about the financials, the banks that will do well with, lower interest rates, more mortgages, more volume. But funny enough, that's a sector that already reacted well. The third quarter, we saw banks performing fairly well during that quarter. But I still think there's some upside, but we already ate part of our lunch there.
Thank you for those That great insight, Mark. Maybe we're in our last couple of miles before the end of the year. Any last words you'd like to share with investors about your strategy or about market?
Yeah, I think that overall, even though there's a lot of things that will probably be settled in a couple of weeks, like the election, for example, or hopefully we'll see the geopolitical tension uh, calming a bit itself in the upcoming weeks, hopefully. I think that overall the prospect for a good end of year is there because of those interest rates cuts, as I said, and because I think that the slowdown in the economy will kind of run its course in the upcoming months, and companies will start to look a little more confident during their quarterly calls. So even if Trump is elected, as I said, it's going to be perceived as a good news for the stock market. So all in all, I think things should be fine for the next 3 to 6 months, and thereafter we'll have to revisit. But you know what? That's always the case.
Great. Thank you so much, Mark, for your time today and sharing all of this with us.
My pleasure.